Hi there, Mike Brady with Generosity Wealth Management, a comprehensive full-service wealth management firm headquartered right here in Boulder, Colorado. Today I want to talk about doom and gloom newsletters and how to read them with a cynical mind. Now, by this point, we all kind of make fun of the newsletter, the email spam that says, "I just won the lotto, dear sir, and just give me your social security number and I will wire $5 million from my Nigerian bank into your bank." And nobody really falls for that. Well, that's because we now have learned how those newsletters, there's a lot of common themes behind it. Misspelled words, dear sir or madam. There's usually some kind of a Nigerian prince or so. And so we have a cynical mind about it. Well, I want to dissect, frankly, some of these doom and gloom newsletters that I see emailed out periodically. And some of the key words that I see over and over again. One thing that you'll see is they predict a collapse, a plunge of over 50% by someone who predicted the 1987 and the 2008 market crashes, as if investing was only avoiding the downturns. I want to come back to this in just a few minutes. I'm going to look at my notes here for a second from an email that I received about a month ago. According to several reputable experts, stock market plunge. We're going to have an imminent stock market crash. Rumored to be preparing for a collapse as the Warren Buffett indicator, which I have to say in this newsletter was very irritating to me because Warren Buffett's actually bullish. So they are attaching his name to an indicator and crash alert system. Lots of really scary things. And I think one of the things that they really highlight is this is by people who predicted the 1987 and the 2008 crash. So therefore, everything that they say, they're going to be right again. And I have to just say that a broken clock is right twice a day. And I think it's real important that if you're, it is not only a sell in investing, but it is also a buying. And if you are, what my experience has been is that a significant number of the pundits out there, the analysts who produce these newsletters, are always bearish. They're always negative. And then something eventually happens, and they say, "See, I saw it coming." I mean, perhaps we know somebody like that in our lives who's always negative. And they say, "See, I told you that you were going to, eventually that bad thing was going to happen to you." Well, that's part of life. And so getting out of bed in the morning has some risk inherent in it. It's how we manage and mitigate that risk, not completely eliminate that risk. Okay. So I'm going to put up on the screen there, stock S&P 500 unmanaged stock market index going back to 1980. And I'm going to highlight 1987. We always talk about the 1987. Do you realize that the unmanaged stock market index, the S&P 500, made money in 1987? Now, it had made, it was in the positive 30% and gave most of that up. But if you were invested in 1987, you actually made money for the entire year if you were in the unmanaged stock market index of the S&P 500. The 2008, yes, that was a very negative year, followed by, I have to say, an incredible 6 years following it. In between, in the last 35 years, 27 of them have been positive, and only 7 of them have been negative. Okay, and one of them was break even, so that's the difference between 35 and 27. And so if your whole existence of being an investor is to avoid the negatives, you are giving up an awful lot on the high side. Now, nobody likes to lose money, and I'm not here to say, you know what, just suck it up and take it. I am here to say that you ought to have a balanced portfolio and not let your behavior and not let newsletters, which use very inflammatory terms like massive 50% plunge by some guy who, predicted the 1987 and the 2008 crash. Whenever I hear that, I discount it. They're obviously trying to use fear and they're trying to use emotion versus some of the data that I think is more relevant, which is what's going on right now. Because, that old adage of every general's fighting the last war. where every analyst is trying to fight the last decline. And so the question is, what's happening right now, and not listen to all those pundits who are always negative. Some of these have missed out on the last 6 years, which I would never have wanted to miss out on the last 6 years of the tailwinds that we have seen by investing in the markets, the unmanaged stock market indexes, the large caps, the bonds. And this has been a very good time to be invested. And I am thankful that I didn't listen to all those people, 6, 7, 8 years ago who were so negative. I'm going to put up on the chart there a 50% stock and bond index graph. On the left-hand side there, that green bar, you're going to see 1 year of a 100% unmanaged stock market index. And then an unmanaged bond is that middle bar, and then on a combination of those two. So what you're seeing is rolling periods from 1 year to 5 years to 10 years to 20 years. And what you'll see is when you have a balanced portfolio, historically going back to 1950, and it could be different in the future. I really want you to be aware of that. But historically, over a 5-year time horizon, a 50-50 bond portfolio and stock portfolio has always made at least about 1% a year. Okay, this is even including the 1987 crash and the 2008. And the problem with avoiding and always being in cash and avoiding and listening to some of these newsletters is that you miss out on the buy side, the investing side, because you're so fearful of the downside. And I think that the truth is someplace in between. And that's why, in my opinion, professional management is really good, because we take some of the emotions out of the equation. We do this every single day. We, of course, want clients to do well, but we're also hopefully experienced enough to understand, hey, you know what? We can't react emotionally and out of fear, because my experience has shown that one of the biggest deterrents to reaching your financial goals is your own behavior. And those with the fortitude to stick to their plan, have a good plan in advance and stick to it, are those that do the best. Mike Brady, Generosity Wealth Management, 303-747-6455. You have a wonderful day. Thanks. Bye-bye.